for us. Let's bring in now Amy Kong of Corient for a look at how she is playing the IPO market. It's good to see you. You agree that this is more of an idiosyncratic case rather than a sign of a true thaw of the tech IPO market?
Yeah, I think we do need to watch the market. This is obviously a big milestone. It's one of the largest, as we've just heard. At the end of the day, we're watching for two things. One is how it's debuted, and so far it's respectable. Not a moonshot, but it's respectable. But how sustainable is that? You know, we can recall back in 2012 when Facebook IPO'd. Obviously, it was a bit of a bummer. And so at the end of the day, when that happened, it really did put a dampening effect on the IPO market. So,
are you a buyer of this?
No, we are not a buyer of ARM. We've been playing AI in different ways.
Yeah, why not? Valuation just simply too rich. We mentioned, throughout the program today, it's about 100 times. Maybe too rich for some, including yourself.
Yeah, valuation is a little bit higher for us. The growth prospects of this particular company has not been as attractive, and so we've been shying away from this balance sheet.
Okay, so you mentioned you're playing it other ways. Is that, code for we like NVIDIA the best of all in AI?
We like NVIDIA, but not at these valuations. We're taking a pause on the name. There are a couple of ways to play AI from our perspective. There's the hyperscale cloud vendors, which we obviously own Microsoft and Amazon and Google's. There are strategic consultants like Accenture. We have end users like Adobe that just went public with their Firefly pricing, and that's an interesting play for us as well. So there are a couple of ways that we're playing this AI megatrend.
I want to go back to the comment that you made about NVIDIA, maybe too rich where it currently is. The valuations actually come down over the last several months as the guidance has gone up and the earnings have been good. So that's an interesting perspective that you have, that you still think it's overvalued. And I just bring it up, Ken Griffin, of Citadel on our network today. He likes it too. Used the word frothy when describing it. Just expand on that. As I mentioned, the valuations come down a lot, and you still think that it's too pricey.
Yeah, there's a little bit of part art, part science. So from a valuation standpoint, obviously the price to earnings and other metrics that we're looking at is on the higher end when you compare it to the broader market or even to the other FANG stocks. Fundamentally, we're also seeing a little bit of, to your point, froth in terms of just momentum building up. A lot of expectations in terms of what they expect from a revenue standpoint. Yes, they have fulfilled their revenue guidance for the past quarter, but that's one quarter of a data point. We want to obviously see a longer-term trend. Yeah,
you're looking at NVIDIA, the PE 109. Of course, the forward PE is a little bit of a different story. What about mega cap valuation overall? How should we view that in the here and now? As really, as a group, they've come in a little bit.
Yes, we've actually been a little bit relieved in terms of seeing the sell-off, if you would, back in August and now into September. Going into this tech rally, of course, is a welcome sign after a terrible 2022. But at the end of the day, we are not adding new money into the markets just yet because, again, from, let's say, a price-to-earnings perspective, it's a little bit on the higher end relative to the market, relative to historical averages as well.
So how are you viewing the market overall? We've mentioned at the very top of the program this, really unique and incredible resiliency in most cases that the market has shown. Enough that, Griffin himself is surprised by it. I think many are.
The data continues to be conflicting, and I agree with you. On the one hand, you've got leading indicators that suggest that the market, rather the economy, should be in a recession already, but at the same time, the consumer has held up quite nicely. And so we are not yet in the camp of saying a recession is out of the cards, and so we're playing it rather conservatively, if you would. We do have fuller positions in tech, but we've been cutting back a little bit just in light of valuation.
Where have you been going elsewhere then if you're moving away from tech? Do you believe in catch-up trades of things like energy or sectors that just hadn't performed all that well this year?
Yeah, we're looking at energy as a sector and perhaps may nibble at that. But at the end of the day, we're really staying with companies that can benefit from shorter and longer term trends. Longer term, we've talked about AI, but shorter term could be something like what's going to benefit in a higher interest rate environment. Private lending is one area that we've liked a lot, and we'll stick with that. Valuations there are certainly less.
I know the noise can be a little distracting.
No worries.
We forgive you.
But the valuations
I'm turning up the volume as we speak.
But the valuations with private lenders, for example, plus the dividend yields, are a little bit more attractive to us.